Sure. Thanks, Shivan. Thanks a lot. And a hearty welcome to my panelists. I'm very excited and humbled to be here to drive this topic of changing financial business landscape with instant payments. Uh, Maybe I'll give a quick introduction about myself and maybe a 30, 60 seconds from each of you before we jump straight into the topic. Uh, so I think, as Jeevan said, I've been with PwC for the last 4, 5 years. I've got 14 years of experience. Predominantly, a decade has been in payments. I mean, in PwC, we're a team of 40 odd people, purely focused in payments. We do projects ranging from strategy to execution. My role in PwC primarily is to drive business development and monitor and supervise delivery of projects in two broad segments. So I look at the non-banking segment, so all payment processors, fintechs in India, and because we're a very core team in PwC that has this unique competency, we do cater to our network firms across the globe. So all projects that PwC India does across the network is something that I look at. So that's just a quick, short brief about myself. And I think we have an excellent panel. We have a nice private bank, new age bank. We have payment companies. We have new age fintechs doing an excellent job, whether it's on the lending side or whether it's on processing payments on the merchant side. And of course, we have the PCI Security Council representative also here. So I'll hand it over in a round robin fashion. Maybe first, Deep, do you want to go first?
Thanks, Ruben. So I look after payments at PhonePe. Been in payments for 10 plus years and I've seen the entire evolution of payments over the last decade in India. A lot of it has been also participated in from my side. Worked on UPI, IMPS as part of the original group of people at NPCI, which looked at launching UPI, right? And then recently worked on a lot of interesting consumer products, and hopefully we'll talk about them. We've seen good growth thanks to COVID as well. But let's talk about that. I think that's going to be interesting.
Sure. Thanks, Deep. Yeah, Mr. Vaibhav Tambe, you want to go next?
Yeah, sure. Hi, everyone. Hi, good evening, everybody. So, once again, I think the brief introduction was done, but I take care of the payments, cash management, business development perspective in a distant bank, around 12 buckets, and predominantly managing a team of around 25, which is managing the large corporate institutes, financial services, MNCs, and so on. And that's a group I manage. And look forward. We've been seeing a lot of trends on our own, but good set of customer use cases. Look forward to the discussion.
Sure. Thanks, Vaibhav. Yes, looking forward to an interesting conversation. Kilan, you want to go next?
Thanks, Zubin. Hi, everyone. I work in payments at Razorpay, and I'm still learning payments on the job. Prior to Razorpay, I've mostly been a product and tech professional over the last decade in the startup ecosystem in India.
So thanks, Ilan. Nikhil?
Certainly, Zubin. Thank you. So my name is Nikhil. I head product at Zest Money. I've been in the payments and fintech space for 6+ years. Prior to Zest, I was with a payments company called Chiller, mobile payments company. So looking forward to the panel.
Sure, thanks. And lastly, Mr. Dinesh.
I think I will go, Zubin. So
Nitin.
Yeah, no worries. So hi everyone. This is Nitin Bhatnagar, and I work as an associate director for the PCI Security Standard Council in India. And largely, my focus in the country is to create a lot of education and awareness around the PCI standards. And I would love to basically touch point in this panel today on the work that the PCI Security Standard has been doing to develop the standards and how these standards can help in protecting the payment data.
Thanks, Nitin. Yes, that would be an interesting perspective to have on this panel. Thank you.
Sure.
Yeah. So with that, I'll quickly jump into the topic. And instant payments has been, very close to me. As part of PwC, we do a lot of work with enabling instant payments for a lot of different countries. So I myself have been engaged with at least 3 different countries, either with the central payment operators or the regulators to help them in their instant payment journey. So it's a very topic that's very close to me. And I'd like to maybe start in defining what instant payments is. So it basically two things it has. One is that the money that is moving from the person who's transferring the money to the person who receives it, he gets it instantly. When I say he gets it, he means he can make use of it right then and there. Up to 10 seconds, they say. That's debatable, but yeah, typically in 10 seconds. And the other thing, it's a service that's enabled, available all the time, anytime, 24/7, 365. So these two things are available in a payment rail. Then typically it's defined as instant payments. Of course, there is a lot more features around it with its proxy and request to pay, and all those are the additional add-ons that various payment rails have. The Indian journey on instant payments has, I think, we were one of the pioneers. We started instant payments back in 2010-11 with IMPS. It was very new there to the market. Most countries didn't have it. Today there are almost 50 odd countries plus countries either gone live or going live. But we were one of the pioneers with IMPS. Well, of course, volumes may not have been that great again because there was no proxy. There was again some numbers that you had to remember and all of that, and therefore that it didn't pick up as much as it was hoped for. But then we all know UPI came in 2015, and I think that has changed the impression of instant payments globally. I mean, when I speak with people across the globe, they're all enamored and all impressed by the achievements that UPI has achieved. I mean, it was launched in 2015. It paid $1 billion in October of 18. It hit $2 billion in the October of 2020. Today it's around 2.3 billion, and I think there's no stopping it right now. It continues to grow and it will keep growing. And I think the number of participants participating in the ecosystem, the number of use cases, the adoption is excellent. I think it's an excellent story, and it's got a lot of global appeals. So with that as the background, of course, there are critical success factors that I see that contributed to the success of UPI. And maybe as an opening question, I want to start with, kind of trying to break down and kind to, unpack these success factors. What are the key things that we believe have led to the success of UPI and has got it to where it is today? So for that, maybe, Vaibhav, you want to go first from the bank side?
Yeah, sure. I think predominantly while Nikhil or maybe Deep would have been a right choice, but I think it's always good to be first. Thanks, Zubin, for that. So I think a couple of thoughts I had along with the UPI. I think from instant payments perspective, when we look at the overall perspective, there are a couple of other modes which are predominantly popular in the B2B or B2C world. But I think that we can cover in the subsequent topic. But I think from UPI perspective, I think ease of use, everybody knows. I think most of the audiences also would be really aware of this particular thing. And in fact, we've been driving a lot of rural financial inclusion products, microfinance. I think the ease of use and probably a lot of money put by the big guys like Paytm and all. So I think it's quite easy, first of all, and it's quite easy to understand. It's quite easy to reconcile. There are not many loopholes, not many technical terms. At least to the user, I think that makes us easy to use. It's a very simple thing. And obviously, apart from that, government, ecosystem players, NPCI, to that matter, everybody has been really strongly focusing about this particular product adoption. I think that's a very simple opening comment I would have on the UPI part.
Sure, thanks, Vaibhav. Deep, from your side, I know you all drive a lot of volumes.
Thanks. I think since I've had a pretty internal view of this, when from the time when we all used to work on IMPS through various use cases. I think IMPS, while it did not really achieve the volumes which UPI has, but I think they had a few very interesting use cases which went really well, right? Domestic remittance for migrant workers, for example, that did really well. IMPS was again pretty useful for foreign inward remittance, real-time credits to consumers, right? And it kind of created a baseline for UPI to a certain extent. UPI, I think, has done great because of two major reasons. Number one is the entire product construct. And when I say product construct, I think it's a very simple, easy experience which has been enabled for consumers. And that is primarily coming because of the separation of the experience from the backend rails, right? So I think that's the major differentiator for UPI. And second is obviously, like Vaibhav was also mentioning, right? A lot of players in the ecosystem, right, from government to NPCI to RBI to various players have really focused on onboarding consumers, on educating them, and kind of pushing various use cases for UPI. So I think these are the two major reasons which I think have been really useful. Obviously, direct participation by third-party players has certainly helped, and that has probably helped in evolve the right kind of user experience for users.
Sure, thanks, Deep. Yeah, I think that construct, as you said, is important because it's India has a very unique four-party construct which facilitates a lot of non-traditional players to play a role in at least the payment initiation leg of the service, and I think that is something that a lot of countries are learning from and are looking at how to adopt because they believe that those extra volumes that come in would come in from such players. Maybe Kilan and Nikhil, any other pointers on success factors for UPI that you would like to chime in?
Yeah, I think, I mean, largely, I echo Deep's thoughts as well. The disconnecting or the idea of disconnecting the front end experience from the actual payment infrastructure, that has really made the difference in fostering innovation, right? Irrespective of, and that has made the product itself bank agnostic. So irrespective of where I hold my money, I have the choice of, as the customer, to choose, say, a PhonePe or a Paytm or a Google Pay, right? So, in a sense, this fostered free market principles where the best experience really wins, right? So that was a key success factor. Another point I would like to add is that the decision to go mobile first or mobile only, right? India has shown the track record of leapfrogging technologies, right? We went straight into mobile, going over, say, desktop internet, right? So that was, I think, a key point which contributed to the success of UPI. So yeah.
Sure, thanks, Nikhil. Kilan, anything else from your side?
No, I think Deep, Nikhil, and Vaibhav covered it. I think the tenets were instrumented around the IMPS time itself, and I think IMPS had a lot of similar capabilities to be able to transform money to a phone number. But I think a lot of the experiences around mobile and third party open innovation model, I think these things have really helped fast track the adoption. Without this, I think it would have been slower. So I think a lot of decisions taken right is helping UPI scale up big time.
Absolutely. Thanks. Nitin, anything from, I don't know, the security side or the way the construct of the UPI is such that, it makes the things a lot safer, there's trust involved. Any pointers from that side?
Not really. If I have to, put it across, I'll try to put it in a very holistically, talk about the payments, rather than, see, we all know that the digital transactions have increased enormously, during the COVID-19 crisis, and this has created also multiple opportunities and for many businesses for broadening their consumer audiences as well, right? And also it has also brought across the increased threats, as you rightly said, the cyber criminals who are using the new data access points today, provided by the increased number of online transactions. You can talk about the instant payments as well, and it has given them an opportunity to steal the payment data, and they're just like going out and selling it to the fraudsters for illegal gain. So now what we do at PCI Security Standard Council is PCI Security Standard Council, we constantly try to work to monitor these threats and improve the industry means of dealing with them through enhancements to the PCI security standards and by training the security professionals. So now data breaches and the cyber attacks, it's a global problem. It's just not an India problem. But definitely when we talk about this, it has impacted India, as we have seen some really high profile incidents in the news to begin your 2021, right? So this is an alarming trend and reiterates that the cyber criminals are out there finding ways to perpetrate your business for illicit gains, and this makes cybersecurity more important than ever. According to the recent World Economic Forum report, where businesses needs to identify threats, talks about that businesses need to identify the threats and make a plan to implement industry-specific security requirements to better protect their customers' payment data. And for that, an example would be the PCI, the payment card industry data security standards. That's what I would have to say if I have to, give you a holistic view, a perspective to the payments and the security when we are talking about, if we are talking about the instant payments.
Sure. Thanks, Nathan. So moving on to let's try to see if we can break down and understand, what has risen to the volumes. What are the different use cases that till today have been driving the UPI volumes? I know initially started off with P2P, we see P2M, merchant payments kind of growing up. I've really, frankly, not seen too many business-to-business use cases or B2C use cases. I just wanted to understand from the panel in terms of today these 2.3 odd billion transactions that come. What are those new use cases that it's really catering to? That's driving those volumes. And I think the next probably question to that is, what are those new use cases that will drive the volumes further? Like we know that there are targets. NPCI has gone out and said that we're ready to do 1 billion a day, right? We're doing 2 billion a month. Now we're ready to do even 1 billion a day. That's talking about like almost 20 billion plus a month. So that's huge growth. That's like 10x or more growth we see in the next few years. So just want to understand where those volumes will come from. For that, maybe we'll start with DeepU and then Vaibhav, we go on to the next.
Sure. So, like you mentioned correctly, right? So we started with P2P in UPI. That was the most simplest use case. And actually, I'll just share how we look at payments in general from a consumer's viewpoint, right? It typically, and the way we've built our journeys as well, it mirrors a consumer's money journey, especially with relation to payments. Consumers typically, once you start coming to the money fold, you start earning money. You start by, transferring money to, say, friends, family, etc. So that's a B2B transfer. You probably start making rent payments, etc. Right? And then that's the send part of it basically. And then you move towards the spend part, and spend part typically starts with bill payments, recharges, which are your everyday utility kind of use cases for you. And then depending on the kind of consumer, you could either go towards an online purchase, which is kind of got accelerated because of the overall COVID scenario, or you could actually start by making payments to your nearby shops, retail stores, right? And that is how we've also kind of seen the consumer journey move. We've seen consumers move from P2P transactions to bill payments, recharges, to then online purchases, then offline purchases. Offline could be either in organized sector, which would be stores like McDonald's maybe, which are more daily, regular sort of use cases when compared to, say, somebody like a Shoppers Stop. But what we've seen is that the consumers have adopted to all kinds of use cases really well. And we're seeing the maximum growth and transactions coming in from offline now. Since the economy is opening up now, we're seeing a very, very good spurt coming from offline. We are in fact seeing 80% plus transactions coming from tier 2 and beyond. So the entire thinking we all had about digital payments only being available to the top some percentage of the country and in urban areas, that's gone. And these are consumers who are sticky. They do about 7, 8, 10 use cases on the platform a month, and they don't need cashback. They just want good experience. They don't want failures, and they're happy with it. And I think that is where the focus should be, to just go deeper into the villages, deeper into consumers who probably are not there on a digital payment platform today. I think there are what, 400 plus million, say, WhatsApp users, for example, right? But UPI may at top have about 150 million users, unique users, right? So there is that 250 million base already available, right? Because these people are using WhatsApp or TikTok, etc., right? And that is the next area of growth in our view. And given that we are really from our 275 million sort of user base, we are looking to really hit that 500 million number by the end of next year, which we feel will primarily come from tier 3, 4, 5 and beyond. That's how we're looking at it. And I think that is where your a billion transactions a day will also come from.
Sure, thanks, Deep. Vaibhav, from your banking
think,
customers, do you see anything
Yeah,
different?
so I think as I had discussed in the opening comment, probably we are focusing this discussion on UPI a bit, but I think if we talk about instant payments, the very easy use case which we have probably touched upon by a couple of our panelists is the smaller piece of B2B payments where the funds are getting received through virtual accounts or foreign remittance. Now, a lot of these payments are working on a use case of a instant payment. For example, you are probably paying an NBFC EMI. Your EMI is bounced, and you're making a payment to the NBFC, or maybe you're topping up your say a mutual fund, or maybe capital market, say Zerodha's account. So there are a large number of use cases which was beyond UPI. Be it the bidding for tendering and the virtual account modes which are offered by a lot of banks. It drives a lot of volume, which is much bigger. The context of sharing this is the wallet or the use cases are too big for UPI to grow further. When we see our transactions, unfortunately UPI is still not at that level when you compare B2B, because we work with a lot of large merchant or fintechs, MNCs, where UPI still constitute still not a larger portion of collection. So I think first point which I wanted to highlight is that the ecosystem is quite bigger beyond UPI. But yes, UPI itself has become a big daddy. And as Deep was talking about, I think what we have seen in the last couple of years, financial inclusion, wonderful of it. Microfinance, the earlier the entire model was working on a particular guy who was to travel start his day at 6 a.m. Go to all villages. And India is a great country. I think microfinance has done wonderfully well. A lot of our city guys, Mumbai, Delhi, Bangalore, we're not aware of how it works, but then it was running wonderfully well. The guy used to collect cash from each and every corner, and that is now interestingly replaced by the UPI story, and a lot of collections have started moving to UPI or business correspondent. I think somebody mentioned about domestic money transfer. So I think the adaptability has taken this quick path in these segments, and as rightly said by Deep, the adoption at the rural level, especially from the QR scanning thing, which has really changed the ecosystem with awareness. But as I said, it is still a tip of iceberg. A lot of use cases are still to be tackled. I think if you see Zerodha, it's a very good use case. You can top up your this thing by UPI. I don't think other earlier guys had that kind of a adaptation earlier. They used to follow the checks or maybe virtual accounts a lot, and still the volumes which can be increased. We don't have a number to substantiate. It will definitely go further. I think that's the limited point I want to add. Maybe we can hear from Killan or Nikhil. Killan will have something to add here.
Yeah, I was going to go on to Killan next and see, because he has a lot of merchants. I'm sure he's enabling UPI for. So, Killan, over to you.
I mean, very similar to what Vaibhav and Deepa mentioned. I think the scope to scale from here is immense, and a lot of that is going to be on the bank of just consumer behavior change, as the digitization penetration. And I can speak purely from the merchant, the business side. I think as more and more merchants are coming online for the first time, I think that is something that opportunity is sitting in front of us is 10x, 20x over the next 4 or 5 years. So I think a lot of that is purely going to be digitization wave, and UPI as a platform has really kept up with the pace on innovation, right? Whether it's UPI to Auto or the most recent ones recurring, and we see many more such innovations when they're already more offline payments, and then how do we make it more inclusive as we scale from a few hundred, a million active UPI users to possibly 700, 800 to a billion maybe in a few years, right? So I think UPI as a platform has kept up with the pace, and I think that's really crucial, and that innovation mindset has to continue. I think as long as that's happening, I think we'll start seeing creative use cases both on P2P and P2M side.
Sure. Thanks, Bilal. So Nikhil, I know you all do a lot of work on the lending side, the buy now, pay later side. Do you see a play of UPI either to disburse or to recover some of this money, or how does UPI play in your platform?
Oh yeah, absolutely. I mean, for us, UPI has been a payment mode that has been steadily growing in adoption in terms of EMI repayments. Before, I think a year back, we were looking at volumes of about 15% of total repayments coming in through UPI. Thanks to this pandemic or this forced experiment of digitalization, we've seen this value rise up all the way to about 35%, constitutes about 35% of our total repayments. And this is despite having, customers having an auto debit set up on their bank account, right? We're seeing customers initiating payments, getting more comfortable making payments on their own via UPI. And of course, this is coupled with innovations and layers built on UPI like BBPS. So lenders have started to accept payments through BBPS and UPI rails. Now, on the other side as well, we were fortunate enough to launch our credit product on the UPI rails just before we went into this pandemic. And that really I see as the future, or this use cases such as these, right? Credit on UPI is really going to drive that gap between the volumes we see on P2P use cases and what we expect to see on, say, a P2M use case, right? Because no matter what you say, COD, before the pandemic, at least cash on delivery used to dominate all e-commerce transactions. So the power of, say, a credit product or a buy now, pay later product is that it really bridges the gap between a cash on delivery and a digital payment mode, at least for the customer, right? So I really expect some of these use cases, overdraft on UPI or credit on UPI, to really propel the use case and bring more adoption when it comes to at least driving merchant transactions on UPI.
Sure, Nikhil. Yeah, I know UPI, I think, initiated some experiment on credit with enabling overdraft. I think they've still not gone full-fledged on credit, but let's see how that pans out. And also, I think the new mandate feature that is now there, I think helps your use case in terms of setting up these mandates for regarding payments and collections. So I think that's one other use case I think they're enabling, so which is great. Nitin, I'll put you here on, and another question is again around security. We know faster payments means it's money moves very quickly. There's also this whole proxy layer, and we know that the pull and push, the pull payments sometimes are being misused. There's a lot of issue around customer education involved also. Just wanted to hear your views on how important is it, or what should end customers look at, because sometimes even though the system may be secure, the weakest link is the user itself, and what can be done to make that better, and anything also from the system perspective, if there is something where it can be done more either from a central rail perspective or from the peripheries, whether it's a bank or a PSP or an initiative.
Sure. So I'll try to put it in divided into two parts. When you said consumers and the businesses, right? So for me, it's very important that if the businesses are first and foremost, the businesses are secure. I think it makes consumers secure. For me, I think that's a first, I think, ideal way of looking at it. But yes, the consumers also have to take care of few things that are important. when they are doing these payments when they are online, right? But let me start with what we as a standards body has been doing. And PCI SSC. I'm not sure, I'm sure, the panelists would know that PCI today has around 15 data security standards that actually helps in facilitating security across various range of payment acceptance platforms, right? It's just not a PCI DSS, which used to people think of that PCI standard, we just say PCI DSS, we are compliant with PCI, but no, PCI DSS is beyond PCI DSS. It's PCI has 15 data security standards now. So now, more importantly here, what I'm trying to say is that the organizations today, the question of what is called, people call it compliant, we are PCI DSS compliant, and it's important, right? And for for many of the organizations, it sometimes becomes more like a, check the box kind of a compliance, right? And which is sometimes is not good. And I think, and this is a poor approach, I would say, rather than to address some of the issues where you can help protect the payment data or the consumer data here, but the PCI standards largely focuses on the payment data. What we are trying to say is that try to shift the mindset from one of the compliance to a continuous or a risk-based kind of a mentality, which is going to be critical in having the payment data secure, for the consumers that you work with. So I think that's more important first. And the secondly is definitely the consumers, there are best practices available for the consumers, starting from the two-factor authentication to having your secure passwords, to have, making sure that you are connecting while working. Now, everybody's trying to work from home and trying to do the online transactions, online payments. How can you make your system secure? Here, one thing is very, very important, Zubin, is also that the companies also needs to start educating their users or their employees to with the best practices, that while they're working from home, how they can keep their work system separate from their personal use systems, because that sometimes creates a lot of problem, and that's where if you see the spike in the frauds which has happened during the COVID-19 is one of the reasons why people were trying to work. If you have an employee has given you a system and you're working and try to work some personal stuff also from the system, and then you get caught in the phishing attack, right? Or with the social engineering attack, So that's something that as a consumer point of view that one has to take care of. But I think business and consumers here now today becomes more are equal now, because everybody is working from home.
Sure, thanks, Nitin. Yeah, I mean, I've seen also NPCI being very proactive in, changing things to make things more secure or make things more clear to consumers. I remember that initially the screen for, a request to pay as compared to a, authorization for a fee was very similar and people got confused. So they really changed it around to make it very clear. Small tweaks that the center has done, I think, to make things a lot more secure. I've seen that. I think similarly, I think there's one more very interesting fact, and I think this is something that, has come out in our research, and also the trust factor of an authorized of a UPI, irrespective of the app that is used. The screen where you accept your PIN is identical across every single app. And I think that is also a very important, factor of trust that, consumers have, that they know this is an authentic UPI, screen for payment, because it's irrespective of whether it's a PSP, whether it's a bank app, whether it's Beam app, whether it's whatever, it's the same one. So these are some of the things that I think in our research also came out, that builds this, factor of trust, and also assures customers that, things that are happening are, good. Okay, so we have a question from one of the audiences, and I'll say it out, and then maybe someone can pick it up. So saying UPI can act as a link between a business in B2C in a non-monetary way. For example, it said Zerodha and few others still need cancel checks to do CKYC. Can UPI step in and to validate the C in the B2C and take away this offline manual process and speed it up? So I think he's talking about the validation of the customer by a cancel check can the account validation be done through UPI, which can eliminate that manual step that is required in CKYC? Anybody wants to take a shot at it?
Yeah, I think there are a couple of products. I'm sure everybody is using it from the account validation perspective. One is the IMPS Rails, where typically you do 1 rupee transfer and then get the account validation. But I think the feedback is being shared with NPCI. NPCI is very aggressively working on building this on the UPI itself. In fact, they've already launched the APIs for PAN validation. And I think it's a very good question. I must say that that's the need of an hour, and I think it's gonna be one of the crucial service which will build all digital businesses. Like Zerodha is obviously one example, but there are many such examples. ZestMoney for that matter. I mean, all these businesses, they have this authentication or the customer banking authentication problem to be resolved. Now, 1 rupee transfer is obviously the one solution which has been there in the market for the last couple of years. But then using UPI rails or using ACH rails, things are already on the last stage of deployment. Probably some of the pilot cases have already gone live. I think we can hear from other also on this particular aspect, but it's a good question.
Sure. Thanks, Vaibhav, for that response. Anybody
Yeah.
else?
I'll just jump in.
Sure, Nikhil.
So I think, see, one big opportunity for this specific use case that I see is UPI recurring mandate. Right? Although it's created for a different purpose, it can be reused for validating or validating the authenticity of a customer. And if you sort of zoom out and look at the reason why a Zerodha or a lending institution does an account validation is so that they can debit the account of a customer or credit the account of a customer at a later date, right? Without the money going to a different party. So UPI recurring mandate, when it picks up steam, when it gets more issuer acceptance and PSP acceptance, can potentially solve this issue. Right now, I mean, all of us are familiar with, as Vaibhav mentioned, penny drop is the gold standard for validating account ownership, right? So this could be a potential alternative.
Sure. Thanks, Nikhil and Vaibhav. I think you would have got his answer. Moving on to another interesting question, and this is a question I do get asked also by a lot of other countries, because they see the transaction volumes being driven to non-banks and then say what's in it for banks. So I said there's always this debate, and they say that if transaction volumes, and we know for a fact that the initiation legs, almost 80% of the volumes come from non-banking players. But again, because the beauty of the design, the store of value, the accounts that are being either debited or credited still lie with the financial institutions and banks. They see the transactions, the float stays with them, so banks should not be, too worried about it. But then this debate is always there in various, especially when there are banks involved. They're fearful of their lunch being taken away, and these things are debated. So just wanted to hear views from both sides. We have a banker, and we also have some of the PSPs who help initiate these payments. So maybe I'll start with Deep from your side. What's your view on this? And then maybe Vaibhav, you can step in.
Sure. And I think, since I've been in banking before this for almost 8-9 years, I can probably add some color on both sides. But to be honest, right, banks, a lot of banks actually are trying to bring in the right kind of experiences for their consumers directly, right? We have various banks trying to build in right mobile apps. SBI, does great, right? They talk about great volumes and experiences. However, I think what banks are great at is about having the trust with consumers, having the kind of treasury regulatory control, having the right kind of back-end systems from that perspective. I think the reason why UPI scaled up, for example, right, and that's the only example of this kind of a model where there's a joint sort of a solution or experience for consumers, right? is because banks were willing to participate in something which enabled their consumers to start using third-party apps to transact in a simplified and easy manner, right? Uh, it goes both ways. Consumers start thinking that, I can do all my transactions at third-party apps, etc. But it also frees up banks resources, both from thinking perspective as well as from execution standpoint, to start focusing on things where they can probably, make more money, where they can probably add more value to consumers, right? So I think it works best in that sense. Uh, for various reasons, banks may not be able to be as nimble as like a third-party app, for example, right? In terms of providing that experiences. And I think the model which is there in UPI works really well, at least in the current scheme of things. Hopefully, it will continue going forward as well. And just sorry, one last point to add. In Europe and most Western countries, they keep talking about open banking, right? I think UPI has been around for 5 years. This is the best example of open banking at scale. So I think rather than them worrying about what will be our relevance as banks, they should rather embrace it and figure out the right business models which will help sustain in the long run.
Thanks, Steve. Bye-bye, over to you.
Yeah, I think probably the competition or cannibalization is never the right word. Banks have been there for a long time, and I think, see, ultimately it's a clearing system, right? Be it your check clearing, it should be there for AGS, ACH clearing, ACS clearing, and now it's UPI clearing. I think the infrastructure would be obviously provided by the bank, unless we're talking about some deep mention about the open banking where the fintech or new banking license are created and something like that. But still, I think today, most of the banks, including our bank, is quite aggressive with, and the idea is to partner with the right kind of fintechs and get the existing use cases resolved. And as I said, while every bank is trying to customize and being as nimble as they can, but the beauty of India or the so-called now Bharat is that every 40 kilometers, every 100 kilometers, you're going to find some new place, and probably some fintechs or good brains around all our country, rather than say 100 banks. If there are 10,000 guys who are trying to make life better for others, why not? Banks would always be there to support, and I think most of the banks are actually working on that philosophy. Simple. I never saw this as a conflict, while some of the people could try to portray it. I mean, that's my personal opinion.
Sure, thanks, Vaibhav. I know. I think the balance in India, the model is excellent. Yeah, both have benefits from it, and I think it works very well. Kilan, any views from your side, being Razorpay, because you all also do a lot of stuff which is edging around open banking, where you all do a lot of stuff in your Razorpay X and different platforms where you play the front end, and the bank is there for the store of value and money. So, what are your views on that?
Oh, I'm pretty similar to what Deep and Vaibhav suggested. I think India actually has one of the most modern regulators, when it comes to payments, and I think we've seen a lot of benefits from it. And I think the regulators are in the right direction with the balance between innovation and safety and security for end consumers. I think that balance is very crucial. And I know when in 2010-11 when 2FA was mandatory, a lot of folks on the merchant side like we were very scared, right? But I think 10 years later, I think we are all really appreciating the benefits of some of these things and reaping rewards in terms of inclusiveness, penetration, all of that. So overall, I think the balance is amazing in India, and a lot of countries can learn from this.
Thanks, Kiran. Yeah, I think, and Deepan, also your point on open banking, and we've been in these debates across other regions, and while India doesn't have a formal open banking regulation, but I think so India falls under the market-driven open banking approach, right? It doesn't need the regulations. It's already been doing it for years, and it continues to do it. The collaboration between banks and fintech startups to come up with new use cases has been phenomenal. And I think that's something that we've seen. Again, now the new concept account aggregator, let's see how that pans out. But payments, we know UPI is the open banking for payments in India. maybe the account aggregator is the data open banking for India. Let's wait and see for that. Okay, fair enough. So moving on to, I'm guessing for time, this might be one of the last questions before we move to the closing question is, we know that the business models kind of have changed, right? I mean, there have, uh, people cannot charge for UPI transactions, but people are trying to move to various models. Instead of making money from, it's making off payments and things like that. So there are a lot of people that we know that there's no MDR, there's no PSP fees, but still there are a huge amount of transactions. There are data streams being created. Just wanted to hear from everyone in terms of what are these new models? How are banks and fintechs looking to leverage UPI to build adjacencies, build other value-added services around it, and work with that. Maybe Kiran, maybe I'll start with you, and then maybe we'll go on to Vaibhav and then Deep.
Yeah, I mean, I definitely am. I'm not an expert in this one. I think the banking and regulatory folks definitely understand this way more. But overall, I think I see benefits from some of these for sure. Right? I think it is driving more penetration, and today if only 100 to 200 million end users in India transact online. If this number were to scale up to 700-800, I think some of these steps could help in that process. And when that happens, in the future, there will be many more opportunities of monetization. So from a lot of perspective, I see many positives. I mean, I do see certain challenges as well in the short run. So I think other folks definitely are better placed to suggest on how to handle this in the short run. But long run, I think inclusiveness, penetration, I think might accelerate to a big extent.
Sure, thanks, Kiran. Deep, over to you.
Actually, I agree with the way in which Kiran is looking at it, right? There's a short-term view and there's a long-term view. And then I think payments is currently acting as a railroad to create that penetration. Payments is, being seen by everybody as the first use case to try and get consumers into the fold of digital ecosystem in general, right? So yes, while NDR not being there is a problem, we really hope that the government regulatory authorities understand that in the long run there will be a need for some market-based commercial model, but that is impacting investment right now. Right, it is impacting investment in various ways, either in terms of technology or in terms of new innovation, people, all of that. Right, to create a network to we have 15-16 million merchants across the country, and to create that network, it needs 7, 8, 10,000 people, and you have to pay salaries. It then kind of moves into a cycle where you're creating an economy there in that segment and all of that, right? So I think the investment right now is being done by entities with the hope that they will be able to, one, create some monetizable, sustainable model going forward. Maybe not necessarily with payments, it could be something else. We don't know. Second, the hope also is that there will be some commercial model on payments which will at least make it sustainable and self-sustainable from that perspective. That's the hope, and I think that's where everybody is trying to kind of focus on.
I think I'll just add something here.
Sure, Nikhil.
So the thing with regulation and policies is that it can either take business models and, in this case, say payment products, straight to the moon or push it off a cliff. And we've seen this happening several times over, right? With two-factor, we saw the rise of wallets, and then subsequently with KYC, we saw the death of wallets. And then with waiving off MDR, we saw the rise in UPI merchant payments acceptance. So I think it's a tricky question, but there is enough innovation in the market to circumvent some of these issues, definitely. And we are seeing a lot of use cases emerging already, right? I think Deep can add more on this, but PhonePe is now more than a payment app. It's a super app, right? It's providing multiple use cases. Same with other PSPs as well, Google Pay, Paytm, right? So I think there definitely will be business models and opportunities to monetize that really emerge. We'll just have to wait and see.
Sure,
Uh,
thanks.
I think I know I hate to use jargons, but I think data is the new oil. Probably the way we look at these rails or these payments in order to monetize, I think in a banker's parlance or in NBFCs for that matter, whenever there is a cash flow or there is a complete visibility for a particular cash flow, that becomes a very big tool compared to the small percentage what you can earn out of it or transaction charge. So I think that data, in fact, in the retail space, the UPI space, it gives a digital identity to the customer, and you're gonna do some kind of a digital lending, some kind of a cross sell, as Nikhil mentioned. So I think that data which comes out from these payment instruments is of humongous value. Probably that's the thing which everybody is trying to extract and build the models. Some of them have been successful, some of them have been still working. I don't see, or rather, we are not experts here to judge that how government is looking at it or not. But I think it has actually given a lot of rich dividends. And as I see from here, the data would be of a lot of value compared to the transactional charges it would have been given to the country. I mean, that's again, at some point in time, we have to look at some kind of issuance and the acquiring side of charging. But I think it's going to add a lot of. I think we are aware of the BharatPe story, right? So some kind of India is a great place in regard. So I think it's going to evolve.
Sure, thanks, Vaibhav. So I know I think regulations came as a big jolt to the industry, and there is a lot of conversations now being going on to see whether something can be done. Zero is too is too sudden, too soon. Yes, but I also, as Vaibhav you said, the payment transactions by themselves create a good data stream, and especially if there are new to digital payment customers coming in, which I think, as you said, is being used to either lend or cross sell, upsell, and I think there are business models emerging and all that. So I think yes, that is what is India is being forced to innovate on that as very quickly as compared to maybe it being a little more slower given the current regulations. Let's wait and see. There are conversations, and we hope things might change a bit at least. Is what I think the industry hopes for. I think we're almost kind of out of time. Just a last question for each of you to give your initial one thought. I mean, this is if you had a magic wand and you had one thing to either change, introduce, alter, which you believe that faster payments would get quicker to the billion a day mark. what would be that one thing that you think you would want to say change or introduce, or that faster payment should do in India? And maybe we'll start with Deep. You.
I think the one thing which I would really want would be quick execution by all the ecosystem players on various feature sets. So just an example, UPI AutoPay has been in the works for more than 2 years now. And I think it's just that if all of us are able to execute quickly and roll out these kind of features to consumers, to market, to merchants, I think the pace of growth will be much faster. But then, like I said, like you said, rather, it's a risk. So I just hope it comes through.
Sure, thanks, Deep. Nikhil, over to you.
Yeah, I think I'll go back to my earlier point. I think just focusing on, say, free market principles, allowing, we're on the right track. We're definitely on the right track, right? With the rise of open banking, just fostering innovation that'll just take everybody or every player in the ecosystem, forward, and just putting emphasis on that. I definitely think when it comes to UPI and instant payments, credit as a use case can really drive innovation. We as a country are extremely credit starved. So the moment you can create use cases that work really well in solving this problem, it can certainly accelerate things, and that's one of the things we're trying to achieve at Zest as well. So,
Sure, Nikhil, thanks for that. Kilan, over to you.
Yeah, I'm going to be greedy and ask for two. I think there are two, problems that I know everyone's trying to solve through one mechanism or the other today, and they're not easy to be solved for. But if deemed success were to go away, I think reliability will go up, and overall more trust and faith will come in the ecosystem. And I think second one is refunds. If refunds were to be made, first class citizen, I think again reliability will go up, and trust and faith from end users will come up. I think these two, I think all of us are trying to apply Band-Aid on this right now across the ecosystem, and they're difficult to be solved. I don't want to say that they're easy to solve, but if I ever had a magic wand, I'll fix these two overnight.
Sure, Kilan. Vaibhav, yourself?
So I think, I'm sure Zubin would agree, and you've seen, multiple countries. I think India, we have done far too many things in this space. We're much ahead. FASTag, everybody knows it's such a good example. So it's actually instant payment. So I think probably, as I said earlier in the discussion, probably this is the era of the symbiotic relationships. More and more such forums, good platforms like IPEX or Your Story. There are so many other platforms which are coming where there's so many collaborative thoughts are coming up, because all these things cannot be really done at a one-to-one meeting level. So more and more symbiotic relationship it will add, and I'm sure we are on the right track. We wouldn't be needing the magic wand by playing devil's advocate. I think we are there on the right track. We should be able to continue the good work, be it regulators, be it NPCI, be it banks, be it fintechs. I think we are on the right track. That's what maybe you can hear from Nikhil. That's just my limited view.
Sure, thanks, Vaibhav. And Nitin, over to you.
No, I think, I heard everyone, and I think I just try to make it, everyone talked about, the growth parameters. And I think what I will try to bring here is that consider any security implementation, that implications rather, security implications that may come post implementation of any of these fast payments or instant payments. And having cybersecurity training is going to be very, very critical to combat the increasing threats of cyber attacks on your businesses. And I think now more than ever, what is important that we all must do is that how we can protect the business data is very, very critical, because if you want to really grow faster, have these instant payments being adopted by the industry, by the consumers, I think the security plays a very, very crucial role. And I think that's where I would request everyone, and I think that would be my one request or one wish from the industry, that we should start looking into it.
Sure, Nitin, thanks for that. And I'd also like to thank everyone here for taking time out on a Saturday evening. And yes, it was a really interesting conversation. A lot of key inputs. I think I hear things like faster implementations, free market forces, people moving quickly, ensuring that it's highly secure are key things that will get UPI to the next level, and India even further accolades globally from its payment rails. And I believe from a volume standpoint, we would go through the roof in a year or two and see that real innovation. Again, thanks everyone for that, and maybe I'll hand it back to Jeevan.